Vineet Agarwal, the Joint MD at Transport Corp of India, joins us on the show right now. Vineet, hi, morning. Give us a sense of how the volume traction has been across the segment so far this quarter. While freight segment benefits from LTL cargo demand, has auto OEM slowdown impacted your supply chain division?
Hi, good morning. In the last quarter of the year, basically post Diwali, we saw that things actually tend to taper down a bit. Of course, that was affected by the auto sector sales that came down. Also, that is a seasonal change at that time with model change, etc. So yes, there was a bit of a slowdown with the auto sector, but I think the other sectors, especially in our freight business and our sea-based business, did exceptionally well. In the freight business, of course, there's growth in the LTL sector. What we are seeing is that though there is some pain on the SME side, lots of SMEs are now actually able to sell nationally. So with GST coming on, that has been a paradigm shift where, let's say, a small trader based in Tamil Nadu is now able to sell in Rajasthan. And we having that network and being 100% GST compliant has actually helped us to generate more business. So these are some interesting trends that have started to emerge in the last, I would say, 6 to 9 months or so. On the seaways side, the volumes that we've seen continue to grow. There are companies that are looking to move their cargo by sea. Actually, we provide a multimodal solution, which is road plus sea or rail plus sea. And companies want lower cost of movement as well as green logistics. So for both these reasons, we are seeing a good traction in coastal shipping as well.
All right. Hi, Vineet. Thanks so much for joining in. I want to talk a little bit about the financials this time around. What is your reading on the EBITDA margins going to read? Because you have the fuel costs, which have eased from the previous quarter. So can you give us some sort of a range that you're looking at?
Sure. So, of course, Q3, the impact of fuel prices continue to remain. So we did see that margins dipped slightly, and that was also because some of this is passed through and it comes in the next quarter. And generally speaking, certain costs were also higher in that quarter. In the Q4 of this year, we do expect things to more stabilize a lot more, and we should actually get to the levels of last year, and in fact slightly higher as per our guidance. So the 10-ish%, 9.5 to 10% range is what we have guided for. In terms of top line, we should look at a cumulative top line of 15 to 20% growth and a 20% plus on the bottom line.
Do you think could be the impact of elections? Elections may slow down decision making, it may just slow down a lot of movement, it may just affect this business sentiment. Historically, what has been your experience 3 months before the election and 3 months after the election?
Yes, you're absolutely right, Nikunj. Things do tend to slow down a bit, and we've already started to see a little bit of that coming through. Across sectors actually. Actually, the first thing that gets tightened up is credit. Across large businesses, small businesses, not just the impact of the NBFC crisis that is coming on, but also just that so much money gets moved out from the system into elections that it does have an impact on credit overall. So before the 3 months before, 2 months before, really things, for certain activities things increase, like for example printing stationery, printing posters and so on. But certain things tend to go down because consumers feel that there is uncertainty, so they'll hold back certain expenditure. Post elections, depending on what kind of government comes on, we definitely see a lot of movement. In fact, actually, I would go ahead and say that irrespective of whatever government comes, we've seen movement that happens. So I'm quite bullish that post elections we would see coming back to the capacity utilization in the industry today is about 75%. I think this should start increasing as well.
Bad news. What is the good news? Where do you think there is optimism, uptake, or there is no good news at all?
No, I think in India we have to live with hope. There's a lot of hope in optimism as well. Um, there are a lot of structural changes that have happened in the last few years, I think is just absolutely remarkable, including GST for that matter. I did mention that the SME sector will tend to benefit over the long run. Capacity utilization, once it starts moving up, we'll see capex also coming in. So there are certain classes of industries, like for example, I met some customers in the industrial space. They're absolutely chock-a-block still with orders. But I'm seeing that some of the larger, I would say engineering companies, etc., the slowdown is slightly there. So I think the good news is that 3 to 4 months from now, around the monsoon, if the monsoons are great, we should see a good pickup.
Right, you're in a pole position to gain as well from the e-commerce boom. Can you give us a sense as to how you're looking to, capitalize on this?
Yes, so on the e-commerce side, we've been actually running fulfillment centers for some of the e-commerce majors. Now, fulfillment centers are actually warehouses, very large warehouses, where the suppliers deliver the material for the e-commerce players. We do the tagging, the barcoding, the sorting, binning, and then when the orders start coming in, we do the complete pick, pack, invoice, and keep it ready for dispatch. So this, of course, during the time there are sales, we see a huge amount of movement. And in fact, now, in the past, we used to always talk about one Diwali and one Holi. Now there's a Diwali and a Holi literally every month. So there are so many sales happening in the e-commerce space that we are constantly engaged. However, the changes that have come with the e-commerce policy, we are seeing that some volumes have dropped. And I think that will still continue to remain for the next 2-3 months till the larger guys sort out how they're going to service, or rather be the right supplier, find the right suppliers to the e-commerce companies. So I think so far it's been good, but I'm seeing that the next 3-4 months is just going to be a little bit tentative.
Okay. So we understand that you've marked a capex of about 180 crore rupees for this fiscal. Will the run rate be similar for the next couple of years as well, or looking at your diversification plans, would you have to up this mark?
I think this trend of 150-200 crores is going to continue. There's absolutely no reason why we should not, because the next few years has a lot of growth opportunities for us. Now, some years it could be on the lower end of that 150 to 200 crores, some years it will be higher. But I think an estimate of about 200 crores for the next, each year for the next 4 years to 5 years is something that we would certainly look at.
All right, we'll let you go on that note. Thanks very much for joining in and giving us a sense as to what exactly is the outlook on your guidance, your margins, the new Axel norms, as well as e-commerce and the sector as a whole.